Okay, I think we should be live now. I'm not sure what was the problem with that before. I think the first 10 minutes were kind of lost, but regardless, let's go over it again. I think the drawn liquidity is this large pool of liquidity here. We have these relative equal highs, and they've been maintained for almost 4 times now. We're in the middle of this range, and we have this consolidation and just kind of still not really going in any direction specifically until I see a shift in market structure. I was initially anticipating these relative equal lows to be taken out before price starts running. However, I'm not seeing that. What we're seeing is price dip below these relative equal lows, and now it's trading higher. I'm going to mark a minor pool of buy-side liquidity. And yes, we have news just now. So let's see what happens. And then we have news at 10. So now that we have a shift in market structure, we trade above these relative equal highs. What we're looking for is every BC that forms, I'd like to see it support price. So what just happened? We have this these relative equal highs, specifically this swing high, then gets run a little higher, but it's still shallow, so there's still some liquidity here. Then we have a breakdown in shift in market structure below a short-term low. We have a fair value gap right here, a bearish fair value gap. And then now I'm more likely to see and anticipate this to be targeted because we have been very shallowly kind of navigating around it. Let's see. But if price kind of just runs up like this, then this was just a small, small sweep of liquidity right there. And then we have now a shift in market structure on the upside right there. If we have a fair value gap form in here, like a new one, like this, and I'm gonna wait until it forms. If it forms, then we would buy in. On here. And with that displacement, I'm pretty confident that this is the only one contract. The only likely, well, a high probability of one-sided move, because we just swept this. This BC is technically supported. It was a little painted outside of the gap, but yeah. That's the trade that we're looking for. So reasoning, we have relative equal highs above us. We have just done a sweep in sell side liquidity. We had huge displacement candle up. We closed above a short-term high, formed a fair value gap, and the likely direction is bullish. Now we're just seeing if this fair value gap would support price, and the stop is below the mean threshold, the midpoint of the order block. And now we have this previous imbalance too. I would allow for price to get in. Let me just remove that. I would allow for price to get into this bottom half, but I wouldn't want to see it. And I specifically want a reaction higher. But now we're seeing price go down into the order block. This is the order block. This is a good signature because we see that this wick has been so long, but then price still came back up and got pushed out of this area where we have the inversion fair value gap. This is the inversion fair value gap and the blue bullish fair value gap. Now I want to see price just run for the highs that we have, and specifically for this previous high, because once it runs above that, it would signal to me that reversal is unlikely, because with every continuous shift in market structure, it's basically a new equity high for the run. I will in fact put my stop loss below the wick, the consequent encroachment of the wick. So this is the midpoint of the wick, and I'm going to move it just below it, because price should not come back down there if we are on the side. Now, is there anything to the left? Let's see. Well, we have large imbalance here. If only I could quickly do that. And because we're in this area, I would honestly probably just take my trade off at the consequent encroachment of this gap, just because that's what I feel comfortable with. The news are about to be released, and price is coming up. This is now the target, and I'm okay with that. This is completely fine by me. Let's watch if price actually gets to the level where I was initially aiming for a complete fill of this imbalance. This tool is just used for preparing your trades, and also if you're tape reading and you just kind of want to record where you would enter and where you would exit and where you would have your stop loss, it would also be a good tool to use. So this is where I had it before at 50.50, and that coincides with the fill of this large SIBI, sell side imbalance, buy side inefficiency. And as we can see, if it was sell side imbalance, buy side inefficient, now we see that buy side is being delivered to it, and it's basically, well, filling that gap, filling that absence of buy side inefficiency. So it's making it more efficient. I honestly felt a little bit scared here when I saw price dip into here, but then it just dipped way further down. Let's see if it gets hit. Specifically, what I used for my logic for placing a stop, I used the midpoint of the order block, so like a halfway point of this black down close candle, because this down close candle is the order block. So once we have this move higher, shift in market structure, this is a change in state of delivery. So like it's like a bookmark now for price. So if it does come back into it, you don't want to see price trade below the midpoint of that block. And I'm blanking out on where it is here. Here we have the bullish order block, threshold, bottom. I had to stop here initially. Then price came back down into like a quarter of that block. Let's see if it was a quarter. Yeah, just a little bit over a quarter, and then it strongly got pushed out. So the fact that it got pushed out like this, as I was saying, that is a very good sign of strength in this move. Like the algorithm was basically pumping the price. The price was spooling, and from here it quickly started running, and that's what we want to see. We want to see low resistance liquidity runs, the opposite of what I was participating in yesterday, which yesterday was a high resistance liquidity run. So it was very, well, even if it was clear, it was very sluggish. Like price kind of goes a little bit high, like a little bit up, and then it has to consolidate, it has to retrace. There might be a little bit of a bigger retracement, like a bigger reversal, and then it again does a little bit more of a run up, and then you have to go through the same cycle. Those things, they are very hard to navigate as a beginner trader. But when you have high, like low resistance liquidity runs, where it is a very straight shot, it is much more rewarding, it is much easier on your nerves, and it is much well, less risky, I guess, in a way, for you to participate in. So as we can see, price would have still hit my target of closing the SIBI, although at first I didn't have that painted out. So once I saw this imbalance, I just went for the consequent encroachment, because consequent encroachment is exactly what it sounds like. It is the consequent encroachment on the PD array, so like on the premium discount array, meaning it is the most likely point for price to go against, or that's what I felt comfortable with, just because, you know, that's what I felt comfortable with. That's it. And that's why I took it off there. And that's exactly what I need to journal, is So for example, I say journal entry, trade entry, I mean, price for this one was 19,612.50. So 19,612.50. Yep. And then it was 1.6 risk reward. Risk was 23.50. And then reward was 38. Heat was basically a move against me. It was 17.75. That's basically what I had to withstand before the move started to unravel. And then the opportunity of range would be the fill of this gap. Well, I guess I can easily 625.75, 625.75, 51.25. Not 26.25. Now with time, we have a stop hunt. This is the stop hunt. To market structure shift to basically 4 minutes later. We have a market structure shift. 1 more minute, we have a fair value gap. And then after that, we have an entry here and then an exit 5 minutes later. So with that, let's what else? And I need to note for myself how I felt well, I definitely felt uncertain. The reason I'm calling that an inversion fair value gap is because we had that gap first act bearishly. So price came back up, filled it, and then dropped. So that was a bearish reaction onto it. And it was respected initially. But then we had price run higher with, like, you can see this is unmissable. Like this candle right here is a huge green up close candle, like a caffeine candle, I think some people call it. It's bold, it's single body, like bold bodied, strong bodied. It moves above this short-term high even by a little bit and then forms a gap. This is a shift in market structure, bullish. So that basically indicates, hey, the buy program is in order. So then now that we've pierced through, like traded through this red gap, we would assume, well, we would anticipate price to come back into it and then maybe touch it and then move higher. But what happened instead, we saw price completely disregarded again at first. When this was trading live, this candle was like strong bodied to the downside. And at that point, I was already in. And at that point, I felt quite, well, quite startled, let's be frank. The only reasoning I had for holding on is, well, the order block and the mean threshold of the order block. Like that price, the move shouldn't get to the mean threshold. Or if it does, it shouldn't close there. But honestly, with all of these things, like a fair value gap, an inversion fair value gap, technically also these two consecutive candles are a breaker, which I guess I don't really use breakers, but I think this is a breaker because we have a short-term low, then we have a move lower as a sweep of liquidity, and then we have a move higher. So then when price, so this is like a high, low, sorry, a low, high, lower, low. That's the pattern. Low, high, lower, low. This lower low move takes out the liquidity below the low, and then it moves higher. So then when price comes back, we would anticipate the first two, well, any consecutive, let's say the highest green candle, the highest up close candle in that range to support price. And usually you would think it should stop at consequent encroachment of that order block, of that breaker block. But we worked through all of it, and of course, after that, what we had is price just quickly started pummeling the algorithm started spooling, and this candle closed up, kind of getting pushed out of all of those discount arrays, which was a good sign. It was a perfect sign to see. It's just that you had to have patience and you had to have security in your stance until then. Let's just say that. So once yeah, I would definitely say it felt like it gave me a sense of assurance and short-term short-term assurance, and that I'm on side with the market move. I'm definitely grateful that I decided to take off the trade at consequent encroachment, even though there was a couple more handles, like 12 more handles I could have capitalized on. I would rather pick lowest hanging fruits. Yeah, and also, as I said, I think it is definitely more of a sustainable mindset to aim for lowest hanging fruit, because I also have done that in the past when I'm seeing the entry, and because I have had so little experience with entering and just generally managing a trade, I would just kind of set the highest target and just hold it until it either takes me out or delivers. But the thing is, with with me being a beginner, I may not hold the sufficient knowledge in knowing that in certain situations, price is unlikely to move for that higher target by the standards of a more experienced trader who would have ability to kind of navigate the order flow in a way where they would have grading of like, this is like the most likely target, this is like the second most likely target, and then this is the terminus, like this is the end of the move, I'm not going to push further. For me, I didn't even have logic behind that initially. I just kind of, as soon as I saw the pattern, I traded without actually knowing where I'm going to get off. And I think I still had that today, like, because I did put 50, like I did put a higher target than, well, than I really thought. Because again, I thought we're gonna go for the buy side liquidity, but then I got a little scared, like a little shaken out. So then I was like, you know what, I'm just gonna take a portion, like take my whole trade off, because I only have one contract at the consequent encroachment of the CB. But remember, I didn't even have that CB painted initially. So I definitely, I'm glad that I looked into it as the trade was going. So that was probably not the best points for following rules. So you should definitely always have the idea where you're going to get off right before you enter. Like before you enter, you should figure that out. So yeah, we filled that gap, I think, completely. 625.75. Yeah, we filled the gap, and now we're sort of in the move lower. We're trading. Let me just make these a little like that, and then okay. Yep, that's basically it for today. I'm probably gonna close it off. Close it off now. Yeah. I guess we can still read a little bit more. See how the price came back into this inversion fair value gap, this one, the red one initially, and now we're kind of trading higher. So this could be engineering liquidity. Now that we've kind of pressed against this and traded lower, potentially, but also now it's not really that clear to me at all, is because we have still these relative equal lows here, and honestly, I could see them going under. Let's see what we got here. Basically ran into this order block, this last up close candle before the impulsive move lower. That's our order block. We ran into it, and now we're kind of just there. I'll also make this on 1 minute chart. Yeah, we have these relative equal lows. We have a new day opening gap below us. We just went through all of the news. Yeah, I wouldn't be forcing it, and that's really the takeaway. You shouldn't force anything. If this closes below this inversion fair value gap, then yeah, this draw on liquidity is more likely than the move higher. Well, okay, so it's been 40 minutes minus the 10. Well, I guess I also had the stream running a little earlier, like at 9:30 I started streaming. I have no idea what happened to that piece of stream. I didn't really say a lot, so I guess not a big deal. But for some reason my OBS just decided to update, and it didn't have the connection to YouTube properly. So yeah, in summary, what we did today, we had $74 win. We did one trade. I shortened the target because I felt comfortable holding it for less time. Or rather, let's say I felt uncomfortable holding it for longer. The target that I initially picked was still hit, so that is something for my journal. And generally, going forward, I will be trying to practice, well, I will not be trying, I will be practicing mindfulness and awareness around the times when the market is not in a single, like not in a one-sided situation. So for example, high resistance liquidity runs. Like I want to learn how to identify low resistance liquidity runs and high resistance liquidity runs. Low resistance being the moves are super simple, they're very easy to see, they're easy to pick out, and they're easy to identify. And then which I guess it's a partially because of the narrative. Like if you're able to identify the narrative, for example, you see this move right now. We went up, we filled the gap, we failed to take the buy side liquidity. Now we're consolidating. Well, we retraced, consolidated, but now we move lower. So now we're likely to reverse. So what I'm thinking is, because of this is now a more likely move. So therefore, wouldn't that make it a low resistance liquidity run and like a more of a one-sided move? So let's just watch it until 10:30 and see where it happens from there. I just want to kind of test the theory of how to identify low resistance liquidity runs. You see how this acts? We just tap it just a little bit. So then if we come back, well, let's just not force the trade. Let's not anticipate the setups. Let's just see the setups. That's another thing that Michael talks about, and I feel that on a personal level. A lot of times I try to anticipate the setup, and then instead of kind of just watching what occurs in the chart, I start coming up with things and maybe even finish, like kind of adding my personal touches on the perception of the price, and then that leads to certain outcomes where there wasn't actually anything in the chart, but because I have looked for it so hard and I have forced the idea so strongly, I end up taking trades on like phantom ideas, basically just running in front of the market. And of course that ends terribly wrong in you just kind of, acting. I would probably put it under acting emotionally, because yeah, there was nothing in the chart. So then why would you act on something that wasn't there? Because your task as an analyst and as a trader, well, you have two jobs, as an analyst and as a trader. Sometimes your trader might not be listening to your analyst, while your analyst, let's say, saying, hey, there's nothing, what are you showing to me? And then your trader is like, hey, just don't talk about it, I'm just going to do what I need to do. And that leads to you over trading, over leveraging, and just doing all the whack things that you shouldn't be doing. So now we see this retracement into this little fair value gap. I have too many things going on. The CPU is a little overwhelmed. So here, let's quickly mark out the consequent encroachment, the midpoint. Watch how the bodies respect that level. We did fill the gap, but now we're dropping. And let's see if price comes back up into this order block. If not, then c'est la vie. It is what it is. But this would be a good sell right here. But because we're so close to this target, it's like, you know, it is what it is. So let's just say, let's see if there's anything on 15-second chart. There's this gap, of course. This gap is probably a good sell. So even if you just sold in this gap and put a stop loss above here, it would be acceptable. Touch the low of this candle, this portion. Oh, now that we have this, I definitely would be interested in seeing this level taken. So if it just does a little wick above, like a little tick above this price, you can sell, because now we have a fair value gap there as well with an order block. So let's just see. Yep, it goes into it. If it was like this and like that, we would already be selling. Let's see if, well, we wouldn't be selling, but I'm just reading the price. And let's see what happens. I don't want to see the body of the candle close above that gap, and technically I wouldn't really want to see close above the order block line, but that's acceptable to the point that this mean threshold of the order block also holds, which I don't really see it holding anymore unless we just see complete breakdown in price. It has touched old fair value gap here just by, I don't know, maybe it didn't. Well, technically. Let's see what's going to happen. Notice how the CBs, they are holding the price down. So here we held the price down, and here we did fill it completely, but regardless, we're still holding the price down. And now we're pushed out of it. That's good. And we have engineered good little pool of sell side liquidity here, where we made these relative equal lows. We want to see that price we want to see the price drop. I don't like that it's spending such a long time in that gap. If it closes outside of this red gap, then it is what it is. I don't think we're gonna go in, and then maybe we'll consolidate going into lunch, and you know, got 15 seconds left, and it's slowly breaking out of the gap, and now it's back in the other gap. Yeah, nah, I'm not sure what it's gonna do now, but if it was to respect this gap and just kind of drop lower, then that would be really something. I guess I wouldn't delete it now, I'll just leave it there. We'll delete the order block. This is the order block here, which I anticipated to hold, but once price closed here, nah, I feel like it's not really that worth of an idea anymore. Anyhow, that's probably it. It's 10:31. The move that I wanted to see didn't pan out in the second half of today's AM session, but yeah, overall, really good day. 74.46. Happy with that. Happy that I didn't force it higher. And yeah, I guess we'll see each other this weekend when I will summarize the week in the same manner that I did the reflection for the past week. I uploaded later on this week. It was a little late. But yeah, the goal for the next week is to really give yourself feedback regarding whether what you're seeing is a low resistance liquidity run in a one-sided situation, like a one-sided setup where you cannot frame it any other way, or whether what you're seeing is a high resistance liquidity run where it's very sloppy, it's very sluggish, it's kind of like meandering, the price is going both ways, it's retracing and not really giving you any immediate feedback. It's very sloppy with regards to respecting the premium array discounts. Like for example, here we just kind of went, we filled this, then we dropped, then we came back up into it, and now we're kind of like going lower again. That's not low resistance. That's high resistance, I think, from my experience. But yeah, I will want to focus on that, and then just being frank with myself about whether I know I anticipate what is likely to happen, and whether it falls in line with my model, and whether it is one-sided. Because on yesterday, the trade that I took really kind of opened my eyes on it again, and I realized how ugly it is. But still, that's something I need to learn and to go forward, to move forward. Anyhow, thank you so much. I will see you on, well, let's see what next week is like right now. And then, okay, so what we got here is Monday, September 2nd is a bank holiday, meaning we have a half day, like a short day, I think. That's what it means. So trading will stop at 1 p.m. So right after lunch. I guess there is a space for a little bit of a morning session tape reading. I'm not sure if I'm going to get to it, but if I do, I will probably not notify you. I'll just put the stream on and tape read. Oh, and then, of course, actually, next week is a non-farm payroll week. So that is usually during that week, you need to get your trading done by Wednesday morning. So like end of the Wednesday morning session, you should be done. And that's what we're going to be going for. So potentially, if I see something on Monday in the AM, on the in the first morning, well, I guess in the morning session, I will take it. Then we have high impact red folder news on Tuesday at 10, and then on Wednesday at 10 as well. So, and then it just goes nuts. So I would not ever advise trading during non-farm payroll, only until after the news release, and still it would be highly manipulated. And that means that it's not the algorithm that is driving the price, it is someone who sits behind the wheel and just kind of makes it go in one way or another. And it's very hard to anticipate, very hard to read, and definitely not advisable to trade in. Like, completely just avoid. You want the nice little setups, very precise. Okay, well, I jailboned for a while now. I'm gonna leave you off here. Have a good one. Have a good weekend.